One of the most critical questions I get asked as an advisor is when should I start receiving CPP and OAS? And like most answers, it depends, but let's break it down. Welcome to the channel. My name is Murph. I'm a Canadian CPA and financial advisor. This is the channel where we turn personal finance into common sense. If you enjoyed this video and want to learn more, hit the like button and subscribe below for more practical strategies. Let's start with a quick breakdown of CPP and OAS. CPP is a retirement benefit based on your contributions while working. The more you've earned and contributed throughout your career, the higher your monthly benefit. You can start receiving it as early as age 60 or delay to 70. Starting the payments before 65 will reduce your monthly benefit permanently, while delaying past age 65 will increase the monthly benefit. So the timing really matters. Old age security works differently because it isn't tied to any contributions. It's funded by general tax revenues, and most Canadians can start receiving it at age 65. Like CPP, you can delay OAS to age 70 and receive a higher payment. However, OAS is income tested. Therefore, if you're earning a higher income in retirement, a portion of this or all of it might be clawed back. In 2025, the maximum CPP benefit for someone starting at age 65 is $1,433 per month. However, the average Canadian only receives $844. And the maximum OAS benefit for Canadians aged 65 to 74 is $734. However, a portion of this could be reduced through clawback if their income exceeds $93,000. So when is the optimal age to begin receiving CPP and OAS? When determining the best age to begin collecting, we want to consider two key factors: any other sources of income, as well as life expectancy. Drawing earlier means that you get the cash in hand sooner, which can be important to cover living expenses. However, your monthly payment will be permanently reduced for life. If your health isn't great or you don't expect a long retirement, taking those payments early might make more sense. But if you expect longevity, this could have a significant impact on your retirement. And on the other hand, increasing those benefits past age 65 can have a significant impact on the monthly payment. For CPP, it increases at 8.4% per year, and OAS increases at 7.2%. If you already have reliable income in retirement, such as a workplace pension, a sizable RRSP, or rental property, or other part-time work, then you may be able to delay CPP and OAS. Taking it later in retirement will ensure those larger payments. On the other hand, if you don't have much other income in retirement and need help covering your expenses, you may take CPP and OAS early and reduce pressure on your savings. Second, we look at life expectancy. Life expectancy is another key part of this decision. If you're healthy and have family members that live into their 80s and 90s, then delaying these benefits could ensure much more lifetime income. But if you have health concerns or just prefer that cash in hand earlier in retirement so that you can enjoy it, then taking it early might suit you better. The challenge is that no one knows exactly how long they'll live, so it's always a bit of a gamble. Which leads to a question: what happens to your CPP and OAS when you die? Unlike a personal investment account, CPP doesn't always stay with the family. There can be a survivor's benefit paid to the spouse or children, and there's a one-time death benefit of $2,500. The maximum survivor's benefit for someone over the age of 65 is $859 in 2025, and the average is $335. The children's benefit is available when the contributor dies and their child is either under the age of 18 or they're between 18 and 25 and enrolled in school. OAS, on the other hand, dies with you, and there's no continuing benefits. If you are planning to delay your CPP and OAS, you can leverage higher withdrawals from your RRSP to smooth your income and minimize tax. The goal of an RRSP is to make those contributions when you're working and in a high tax bracket, and then withdraw the funds when you're in a lower tax bracket in retirement. For example, assume someone retires at age 65 and is planning to defer CPP to age 70. They can bridge that gap by taking RRSP withdrawals of $15,000 to $20,000 over those 5 years. This can be a daunting approach for many retirees because it depletes their RRSP early in retirement. However, it can help minimize those mandatory withdrawals later in retirement and reduce the risk of OAS clawback. RRSPs can be a ticking tax bomb if not taken strategically throughout retirement. On death, you can roll an RRSP to a spouse without tax consequences, but when that spouse dies, 100% of the RRSP becomes taxable. And if there's a lot of income and assets in the estate, up to half of the RRSP could be lost to taxes. So, when should you start taking advantage of these benefits? It really comes down to your income needs, your tax situation, and your health outlook. If you need this money earlier or expect a shorter retirement, then taking it early might be best for you. If you have other resources and expect to live a long time, delaying will provide more income security later on. Every situation is unique, and the best answer often comes from running the numbers with a financial advisor. That's all I have for today. Thank you for watching. Chat about your own benefits strategy in the comments below, and always remember, pay yourself first.